Okay, good afternoon, guys. This is Simon with ToughTrader.com doing the trade review for ES and CL for the 5th of June. Quick disclaimer, if you'll take a moment to read it, past performance is not indicative of future results. There's significant risk in trading futures. You can lose all your capital. Please know what you're doing. I can't tell you how important it is that you know what you're doing in this stuff and you understand the risks, both what you can lose and what you can make. The goal of this is to simply match up what we did what we looked at this morning, what we did during the trading day, right? And where we got it right and where we got it wrong. Okay, so coming into the day, let me switch this. First thing that we noted was both ES and NQ are looking pretty darn straight up. Let me get this up over here. Okay. We were looking pretty darn straight up. If you look at the profile, we noted we're one-timing to the upside. Let me fix that. Okay. We're one-timing to the upside. That in order for that to change, two things had to happen, right? First of all, we had to be able to trade underneath prior day's low. The fact that we were one-timing to the upside made the risk more significant of simply shorting on the push straight up, right? Made it more difficult. And that while it was doable, you had to accept the fact that if you did short, you might get run over on a straight up move. No one likes to get run over on a straight up move, but that's how it works. Okay, so you have two choices in that situation, right? You can simply choose to go, hey, until we stop one timing, I'm not shorting, right? You can pick a line in the sand that needs to occur, which I suggested was at minimum prior day's high, meaning a trade above prior day's high and a break back in on prior day's high. Or the easiest way, and actually the most profitable trade of the day from my perspective, was to ride the long back to the upside. Okay, so we know that we were one-timing. Let's go look at the markets real quick. So this is the other computer. So if we look, first we'll take a look, and we're going to do CL last. I think it's very interesting, but I had the fewest number of people trading CL, so we'll leave it for last. So if you'll look, both markets opened up. ES was trading inside of Monday's range. CL was trading, why did I put that? That's today. Monday's high. Sorry, guys. We gapped above Monday's high in NQ. We were below Monday's high in ES. Okay, so importantly, what we wanted to see was at least, and what I mentioned was if we broke above and established above Monday's high, the first trade that most traders would consider. So what you're going to see here all day, let me explain this. What you're going to see all day is that locals were in charge. Why do we know that locals were in charge? Because trades were moving to the tick and institutions just don't move that way. Like that's all floor traders. Then we're going, so see how we have, here, let me move this. See how we have exactly a double top here and it gets rejected. If you look at the, okay, let's spread this out. There's a couple of clues. See at the low how we have exactly a double bottom. When it's too perfect, it's all locals. It's all locals trading. See how we came to this anomaly? Just missed this gap fill. We grab it just to the tick underneath, and it pushes out, right? And then you'll see on the backside test, see how we come exactly to the tick of the downside bar to test them and to the tick. When we get to the tick kind of trading, and it happens all day long, it usually means traders are in control. So from the short side, I mentioned initially that if we sold back into underneath 27.49, that would be the first place I would look for a short, right? I did not take that short because I actually wanted to see it push back in. Once I did see it impulse move, so there's a difference. Clearly, and I'm going to show you on the other chart what this looked like. Clearly, there were some traders that simply had a sell limit underneath 27.49 and a quarter, and if we traded underneath 27.49 and a quarter, there was a sell limit. How do I know that that is what happened? Because when I look at this, and drag this over. Okay, that is 8 in the morning. This is 27.49. Is it 27.47? Sorry, guys, give me 1 second. My brain is not firing 100% yet, but we'll get it there. It was 27.49. Okay, So this is 27.49 right here. That is not possible. I have to be off by a day. Hold on one second here. Here we go. There we are. There. Now we're on the right day. Here's 27.49. Previous day's high. So look how perfect it traded, right? We came up. So this is a 1.5 range bar. It gives me much greater detail. That's the algorithm. It tells me where buyers and sellers are stepping in, hence the different colored bars. And the stars tell me where I generally want to trail in. So while this is for the public, it's also for members of the trading room. So guys, remember when I talk about when we get these stars underneath at the lows, they're buy indications and they're about to push. But when I get a star at the very top, okay, and again, I didn't take a short here. I just pointed out the possibility. We get a star at the very top. So we first of all ended up with a little buy signal trend line up there. And so you can see that break. We still weren't inside prior day's low. See how as soon as we hit inside prior day's high, as soon as we closed in, we got a heavy sell bar and they got an immediate push down. Notice how we come back exactly to the tick, right? And what we're backside testing, guys, for the guys who have the algo on the desktop or the ones that are using it in the room, we've now backside tested this area right here. So look, this process is so fascinating, right? We had an idea that we might have a short up here because you could see it exhausting, right? You knew once they closed back in, you had a pretty good shot at a short. And remember, all of this PA on a 5-minute bar, it just looks like this. It doesn't look like anything nearly as dramatic as what it looks like on the smaller range bar, right? So then I saw what I wanted was an impulse move below, and we finally got that. Now I tell you, Ron was short, and he called it. He shorted to the tick at 49 right here for a beautiful short to the downside. But now what we have here, this move down, if you look, this is 27.52 to 27.42. In the room, I'm constantly talking about what's key, 10-point rotations, right? So if you'll look, when we came back underneath, when we got back underneath this push, when we made this push and we established underneath, right? If we roll a little bit further over, what I said was, hey, that was a pretty hard push to the upside. See this bar, bright blue? It was starred. It told me, hey, people really wanted to make this go back up, and they really pressed back against previous day high, and they were looking for that push to the upside, right? So if you'll think that through, that was actually, if you're going to make the bet, and I mentioned in the room, if you're going to make the bet that we were going to short, your entry had to be at 27.49. Your stop needed to be at 27.52.75, 27.52.50. I didn't take that trade. The trade I did take, or I attempted to take, was this trade right here. When we broke underneath, I was sitting at 27.47, and it went right there to the ask. I did not get filled. I lowered down to 27.46 3/4. Why did I do that? We've now impulsed move underneath. Okay, so remember this morning when I was talking about knowing the different looks that you get? It's very common when you trap into a prior day's high, if they attempted to break out, you trap back in, that you trade to the other end of the range. Here, I'm not sure that we're trading the other end of the range. Here, I know that we have an impulse move down, and now I'm using the algorithm to go and hunt down my locations, just like we could have used this location to backside test for this entry. Let me erase that. I just have arrows going all over the place. I could use this, my strongest buyer on the way up, for my backside location if I had chosen to, right? I can use this guy for my backside test for the push back to the downside. Comes in, obviously, and clearly rolls all the way down. Now look at where we're at now. We have now done exactly what the textbooks say the market should do. You established above prior day high. You established underneath prior day high. You've come back and rolled back up, and look how efficiently the market has tested each strong bar. If you're still trading off of 5-minute bars, you have a really hard time getting an advantage in the market. There's nothing horribly wrong with it, but there's no significant advantage to it. Okay, rolling it along. We do not get filled here. What this looks like, so I want to compare so you understand, because it's important to have both pictures in your head. This, right, is what this looks like right here. So this backside test of this structure here to the left, right, rolls us all the way down to Monday's low. Monday's low becomes a pretty logical place to get the trade. Now also see what I highlighted in blue at the bottom, guys. What I highlighted in blue in the bottom, I said this is huge tick divergence right into this location, right? And what I said was, if you're going to attempt to take this, oh, I had one other thing. When I took this, I originally took, what did I take long? I took something long that stopped originally. Oh, I want to show you something. Okay. So for the guys using the algo, I took the aggressive entry 43.25. Yes. Okay. So I want to show you something here. Okay. And I know for guys on YouTube, if you're not familiar with me in my room, this can get boring. Stay with me. This is where the money is. This is where the details are. I originally took, so the patent entry is to get the star printing. That's where the long comes with, especially with a strong delta, right? A big blue bar for a push to the upside. That worked there. What I tried to do is I saw we traded one tick underneath here, and this is delta divergence right here after another strong push down. And I figured we were going to push to the upside. If you look, I took this trade long right here with a stop right underneath here. Now the trade clearly stopped, right? So the question becomes one of risk reward and whether I was at location. Why is that important? Because if you go look at that 27.43, and I took the trade, so that you have to consider this. This is where I'm taking the trade right here. Notice there's no zone there. It's not a prior day's low. I'm just simply thinking, hey, we've stretched pretty far. We one ticked underneath the prior swing low, and we did it on tick divergence when we pushed to the low. And I figured, hey, I've got low RR. I'm shooting for almost a 2-to-1 risk reward to the upside, and the trade got stopped. Had I chosen to, so I want to go back and show you this. I simply could have taken the trade at the close of this bar, and I was able to get a maximum favorable excursion on that trade. See that 43.25 moved up to 44.25. I had a point. When I had a point, I could have simply moved my stop to break even. I chose not to. It got stopped on this bar right here. Okay, important process here. I did not freak out. I didn't get upset. I traded on the proper size, and I still knew I was generally in the right location, right? If you're going to be a professional day trader on a small time frame, you have to expect that some of your trades are going to get stopped out. If your trading structure is only structured so that you are constantly perfect and that's it, you're going to have a very disappointing trading career, right? So you got to be realistic about the explanation. If you look and we scoot over just a little bit more, all right, so I want to show you all this. See this right here? See how heavy this push is? See how we get this next heavy push down and I get this star right here again? So notice what was missing. So notice how this trade could have worked differently. Here, if I wait for the star to print, notice that I almost get my 2 points. Actually, I do. So see how if I come down, waited, star prints, I get long. He goes 44.75 to 47, and that also sets up my short, right? So I could have done it. For guys who have the algo on the desk, I could have done it flawlessly. I was testing into my last best buyer up here on the right and over here to the left, right? I come down. I have a heavy delta on the push down. I close above it with a good delta. Instant 2 points right there. Nothing wrong with that trade. I could have flipped around. I was already trying to flip around and get the short at 47. No payday, right? It would have been interesting whether I would have taken the same trade had I already been short here, but I think I would have. And then we roll down one more time. Now, look, this is almost, see this bar right here, 1035, and this bar at 1044. They're almost identical, right? But notice the slight differences. First of all, it's outlined in gold. What does the gold outline mean? The volume in this bar was greater than the average volume in the preceding 10 bars, significantly greater. I don't want to throw that number out, but there's a reason why these bars get lit up in gold like that. There's a ton of volume relative to everything else around it going off in those bars. It's delta divergence. We had a bar that closed with a negative 1992 delta, and it closed at the high. That means there's someone tried really hard to press lower and failed, right? Lastly, I get the star to trigger. I took that trade right there at 27.40.50, and I put the stop 1 point below at 27.38.50. So that means I had 2 points of risk in this trade. And guys, correct me if I'm wrong, but I'm pretty sure, I'm not looking at my blog, but I'm pretty sure I had 27.40.50. Immediately gives me a push up. You know what? It was 41. It was 41. I stand corrected because I was trying to get 43 and I missed it the first time. So now I remember. I didn't get the bottom tick, so I went 41. I was trying to get 43 for my first scale, 41 for with 38 stop. Got it, 3 points. So didn't hit it the first time. So remember, I'm following process all the way through here. You had two choices. You can say, hey, I think that's a good low, which I did. But then you have to make a decision. If you missed your scale, which we traded at the ask, but we didn't trade at the bid. If you did not get filled here, you had to decide whether you wanted to move your stop to break even or stick out the trade with a stop at the low. I am a pretty stubborn trader, and I'm pretty confident when I get my location. I'm willing to take my profit or take my loss. So I was able to capture. So if you look, we came all the way around here, right? We test again, day traders in control, perfect double bottom. See that right there? Again, delta divergence, again, another star showing the buy indication. This time it pops right to 43, and now you can trail up from there. Half my trade went off at 43, right? Okay, come back and look at what this looks like on the 5-minute chart for a second with me. Still, see, I highlighted it when I was there. Massive tick divergence through the day. And what I say the target was 27.45 to 27.46, which was also the mid of the day, right? So this is pretty mechanical stuff. And so you know when the markets are mechanically in charge, right? Here to here. Okay, so now you're rolling down. We double bottomed. This is the logical target. And then I said if we can hold that 45, logical target is 50. And then our upside target, as mentioned in the meeting this morning, was 54, right? So we were putting all the pieces together. You never let it get flustered. If you didn't take the short up top, you didn't need it because you had a great setup. Now I want to tell you something else. We bought when we were also in the hole on tick divergence down here. What did I say in the review last night? That the rotation size would decrease, right? So we're on a roll from 27.52 down to 27.39, 13 points in a low volatility environment. We bought the June 274.5 spider calls, and we bought them for 65 cents. Okay, they traded as high as $1.08 earlier today, and they're currently trading at 91 cents. Okay, so that means on 10 contracts you risk $650, and you made roughly $300 on your $650 risk, and you had as much as $465, I think, at one point on that trade. Depending on actually where we go out. And those options expire tomorrow. So very near term. And again, the way I suggest people consider looking at that risk on those options is, hey, I'm going to lose, if I'm wrong, $300 to $1,000 on an options trade, depending on how many contracts you're trading. If you're a smaller trader, some guys are going to lose $5,000 to $10,000 per trade in the room, right? Depending on, again, how many cars they're putting up. All I'm suggesting is that when you're in a key area on a key stretch, you learn what the options look like because of two things. First of all, you understand that's the most you can lose. Had we happened to come down and retest last week's high and still pop back all the way up to 27.50, you still would have gotten paid versus on the options trade, the futures trade, you would have gotten stopped out. It's a very, very nice alternative. And again, if you remember last week, we bought calls on, I think, last Tuesday when we were deep in the hole. Those calls went from 59 cents to $3.85. Okay, they're really over 2 days, but they're really give you a powerful way to extend your trade. Okay, so as you can see, once we put in the low, tick divergence, and they squeeze them all the way back up, the target is still 27.54 for me above. The extended target is 27.60. Going into tomorrow, we stopped the one timing, so it's probably a little bit safer to take shorts from up above. What we will do to improve tomorrow, what I would like to do to improve for tomorrow is I would like to, even on reduced trade size, I would like to get more aggressive on these failures underneath these key buying levels. When we're closing underneath these where the algo is flagging large buyers, I would like to get more aggressive on the short side plays if we're on extensions up. And I'd like to replay exactly what we did today on the long side trade. That is picture perfect. You can't get better than that in a slow and grinding market. It's exactly what we want to do. And we want to go back and revisit those calls as they set up. I'm not so crazy about buying the puts at this point because the market's just still slow grinding up. And by the way, even though ES has shown some ability to roll down, NQ is still just looking like a boss. It's still traded underneath Tuesday's high, but I'm not eager to be short until we're trading at least one time below prior day's low and holding. I'll be interested in extending my shorts at that point, but not until that happens. So I want to pause for a second for the guys that are in the room. Does anyone have any questions? Randy, did you re-enter this trade afterwards on the pushback up? Most everyone's banked their dollars and left for the day already. You did not. Okay. But you see where you could have improved your entries and exits, correct? Ron, no stop is safe. Okay, so all you have to do in your trade plan is look at whether you wanted to bring your stop to break. So remember in your journal, right? Now mark where you're putting your stop, whether it got taken out and whether it would have survived the true stop originally. Because what you want to know is out of 100 instances of entering that trade, right? You want to know, would you have been better off taking the near-term, short-term options instead of taking the futures, right? You want to know if you left your stop in place, whether that stop would have survived, right? Or whether it would have gotten taken out. And then the last piece you want to know is, would you been able to on your extensions up, right? When it looks like that and you're down, what you want to do is take this, see this PA here? Okay, this PA frustrates a lot of people. When we get to a low, it'll come back and it'll double back on it. A lot of times it'll even break the low, trap back in and go. But a lot of lows in the summertime look just like this. The other trick that it does is we'll come up and bounce like this. And then at the end of the day at 2 o'clock, we'll come in and just break the low by a point or two, trap back in and shoot back to the other end of the range. Okay, so that pattern right there, you want to become familiar with it. Also, look at the time frame, 10:30 to 11. If you'll go back and look at last year's summer trading, I'm with you. That's why you just want to do it in your journal and keep a general sense of which patterns are working. And so the way I handle that is I have I know you know this, but I have a clip-in notebook, and I print what all the bottoms look like so I can have an idea of how they're starting to form. Like if you'll note on this one, some minor it's minor, but it's interesting, right? See how the body of the bars never had high, even though we had a double bottom, the body of the bars were higher from bar to bar on a 5-minute. Small cues like that help you kind of decipher what's going on. And maybe, so I know you have the algo on your desktop, right? So if you look at that trade, remember this became your last best seller right over here, right? So remember how I talked about in the morning. Remember how I talked about in the morning, if you get over this last best seller, right? So if you look in this push down, you had two guys. You had the 1684, this guy, you had to get above him. But then you also had this 2569 that you had to get above. So see how you got above the first time, but there was no negative space, right? That's the top of the bar. There was really no negative space. But see how you finally, so see here how you finally cleared above him, and they backside tested this bar, backside tested that exactly the second time, right? You could have taken that, and then this was your next target right over, nope, I take it back. This was your whole thing right here. And getting above him. So this over, under, and coming back and testing, the second time you get above that bar, it's really common. We had something like that this morning of getting that push to the upside, and that's what launched you all the way back up. And as you can see, we're closing up near a high rotation. We got all the way to 27.51. My guess is overnight we'll come back and tag that 54 in the overnight session. Okay, so understanding the pattern, both from a short-term algo perspective, what it looks like, and then if you look from the 5-minute perspective, right, same thing. See how this was your last biggest seller right here? See how we finally closed, clearly closed? So there's a difference of closing above and clearly closing above. I like a little bit of negative space, like on this bar. See how we backside tested right here? And then that's what generated that push to the upside. So all you have to do, Randy, I agree. I don't think it's possible to spreadsheet the whole thing and understand it, but it is possible to take a picture of that and write off to the right so you remember it, exactly how the sequence went, and compare and contrast, and then go back and look at what other lows look like and what those lows look like where you, depending on where you are in the range, because that low will look different when we're having 50-point ranges and we're at the bottom of a big wind down to the downside versus what it looks like when we're trading narrow ranges all the way at the top. Okay. And then lastly, let's look at CL really quick. Again, I don't really trade CL in the room as much as I coach it, but I wanted to show something that was pretty important. So the dashed lines, okay, for those who are uninitiated, I know most people just want, give me the 5-minute bar and make it easy. So I'm going to pull this in so everyone can see how this actually worked. Okay, this is the overnight session over here to the right. You can see the pink line is prior day's value area low, okay? And each of the white areas are specific anomalies in the profile. We are looking for responsive buyers. Again, the algo helps us out. I'm going to take a shortcut on this so everyone can see this. Okay, so if you look, what you had was, so we'll pick it up from 4 in the morning. First test into this first area, no response. Second push down into this second anomaly starting from 4 a.m. Backside test rolls up into the anomaly above. Here, I'm going to trace this so you can see. And I posted these last night for the members. This one does not get a response. It already got the response over here. Okay. Push down, backside test, response back up, comes for the second test, breaks below, backside test, comes right into the anomaly. See that? Push up to the next anomaly where we find responsive sellers, comes back, bounces, second bounce, right back to the anomaly. We dance through here. We've already been in once. We come for the first backside test of this location, reject back down here, push. This is already 9:56 in the morning. Push all the way back up. Right, so remember what CL and ES are doing in all of this. What's the market's trying to do? It's trying to take out suckers and chumps all the way through this process, right? So what everyone looks at this and go, oh, we're trapped back into value. See that high volume bar? People pushed really hard. They said, oh my God, I've missed the whole thing. It's going to break. Let me get in. Bam, rip down. What does it do? I'm going to spread that out for you a little bit. It's so important that you get that about CL is it traps in the sheep much more than ES does, actually. Okay. Sheep come down. We consolidate sideways. Everyone sees this consolidation. It goes for almost 30 minutes through here. 30 minutes of consolidation, unable to break back below support resistance level. Bam. See all those big deltas there? Everyone thinks it's breaking out, right? Notice that we get underneath. This is our biggest buyer. Get underneath it. Backside test, that point of control. And now we're going to smoke everyone over here who had stops right on the top of this. We're going to take those stops out, back into support, back up into resistance, little counter rotation back down, attempt to get back up, trapping more traders. You see that big blue bar that pushes to the top? It tells me there's a lot of buyers. We get underneath them, back down, one more test of this area. This is already 11 o'clock in the morning. And then that final push back in. Now, this is the second time back above during the U.S. session, back above into the value area. Look how that treats it as we move up prior to day's value area. Now, look how we came right into, I want to make sure y'all saw that. Look how we established above, right? One test. We rip them all apart, right? Cause everyone take a loss. Consolidate above. Now we make that push to the upside where? Right into 65.39 to 65.48. Reject out of that area, right? Run all the stops back where? Back to the top of structure. Push back in. And if you look, I think that's where we closed out the day right there. Yep. That is where we closed out the day. That's a perfect trading day right there. Almost every zone gave you an area to look in. And then if you go back and look at the algo, again, for those guys who have the algo on the desktop, look at the stars that fired from location. Okay, I want to point that out. Going way back to the prime time, which I consider 8 o'clock. Right? Okay, notice if you took the trade here and you just put your stop below here. So that's let's go back even further. Okay. So here's 9 o'clock. Wow, I have to go back even further than that. Sorry, hold on. Let's go back to it. I'm off on the day. There we go. Right there. Okay, here we are. This is when I started trading, was approximately 8:30. Notice this is my first long right here, right? Notice that if push above, stop right below, this is less than a 15 tick stop, pushes straight up from here, okay? Here's short, notice that we get the white dotted line is resistance. I get my star, push down. I get at least 5 to 10 ticks, which is all I'm trying for, plus the trailer, right? Notice I get a star, but out of location. But even if I took it, again, the star indicates to me that I have momentum building up in a potential run. I still have a tight stop, and I can get a 1-to-1 risk reward on my push to the upside, right? Notice we trade sideways. Now, I want you to see this right here. See how I got my buy indication here? I was still from 73 to 83 able to get 10 ticks out of this trade before it came back and stopped. I don't want to short this into support. Okay, waiting. I think I took a stop here. Okay, because I'd rather try. I'm trying to push up into the 65.07. That's what my goal is. I'm pretty sure I took a stop right there. Okay, we then second long right there at 10.08. Easy profit target right there. Now that's the first time above. I want to show you that's the first time above value area high. Remember, everyone's thinking, here we go, right? So I'm trailing up on this. Now watch. There's this shift down. Looking inside this, see how that 857 becomes your best buyer through here? I want to circle that for a reason I want to show you. That was my best buyer, that green line. So see how I backside test them, try to get above, nothing doing. Now we're going to long liquidate right back down to 69.42, right? And then watch when we come down one more time. See how we came back and tested him one more time, right? Watch the number of times we test until we finally get above him. See when we finally established above him again, backside test, and then you get the star fire right there at 11:42, which, by the way, I was too bleary-eyed to take the trade at that point. I've been up. It's been a long couple of days for me, right? See how that star fires? And I know, because the algos told me where my last best seller and last best buyer are. I'm above that guy. Backside test him, get the star. Now watch the push, right? Where? Into resistance. It's already been pushed out. That is really critical that you understand how the day time frame areas are interacting with the intraday areas to give you a very high odds trade setup. So what I would leave you with is this. First of all, that ES, right? ES closed out near the high of the day. Okay, so the lessons you want to take away from it. If you got people who got all emotional about the market rolling down to zero, okay, people who got all emotional about, hey, the market's going to zero, and I talk to traders all the time who have a difficult time holding on to their profits. They see this down here, and they think, hey, we've been up 6 days in a row, 5 days in a row, whatever it is, it has to go to zero. That is incorrect thinking in my book. You have to assume that we're going to push back to the upside. That's what you must assume, okay? Because we have simply not had a significant breakdown yet, and there's going to be buyers lurking underneath. You have to know how to recognize tick divergence and what it means. And then secondly, if you're just trading off of 5-minute bars, it becomes very, very hard without seeing, and Randy actually put this to best. Randy said, I always knew you were trying to communicate what trap buyers and trap sellers look like, but now I actually know what it visually looks like by using the algo, and that's exactly what we're trying to improve. Tomorrow I will try to be more aggressive on the shorts on a test size, meaning I'll reduce my trade size because I saw that we had flexibility and we traded below prior day's low, right? And lastly, my goal for tomorrow is to get more sleep, come in and execute at even a higher level. And I'm writing in my journal, look how long it took, right? We nailed the lows today. Look how long it took to extend all the way out. That was at 11 a.m., 10:45, 11 a.m. we were entering that trade, and it took all day long to get the extension, but it was available to you. So if you're struggling trading, stop. Paper trade till you can get it down on paper. Find a mentor. Doesn't have to be me. I don't care who it is. Just find someone who has more experience than you do that can teach you the ropes, right? Take it one day at a time. If you'd like to visit us in the room, send me an email to tradertough@gmail.com. I'm happy to extend a 5-day pass. Trading should not be exciting. It should be a business, and it should be relatively boring. The exciting part should be, look what I've accomplished after X amount of work. That should be the satisfaction that comes from it. But if you're looking to get high or get a quick rush or make a lot of money quickly, it's a boatload of work, and most people want it to be easy. And it's just not a casino. You got to be able to work through the process. That's my 2 cents about that. If you like the video, please, please, please hit the like button. It helps me out significantly. I hope everyone made a lot of money. Remember, the pros are out there trying to take your capital. You need to be armed with good information to take the money from them. Everyone on YouTube, thank you for joining. Guys, stay in the room for a second. I have a piece to add afterwards. Have a great day.